volume of the world's non-financial corporate debt has generally skyrocketed over the past decade, driven in large part by ultra-low, zero, and even negative interest rate policies at several global central banks, including Sweden's Riksbank. The Swedish central bank's ultra-low interest rate policy since 2008 has enabled corporations and households easier access to the credit markets. This has spurred the country's debt levels to massive heights. According to the Bank for International Settlements, Sweden's non-financial corporate debt has mushroomed to an average of more than 150% of GDP from March 2009 to December 2018. This is up over 40% from the previous decade. Sweden's households have also amassed a tremendous amount of debt, to the point where the Riksbank deemed in late May that the level poses the greatest risk to the nation's economy. Meanwhile, the central bank's negative interest rate policy, or NIRP, seems to provide ongoing encouragement to households as well as corporations to continue tapping the debt markets, especially at a time when external shocks to the global economy have intensified. This includes heightened fears about slowing global growth, fueled by trade conflicts, as well as European banking and auto sector worries, and Brexit. Against this backdrop, investors in the week ahead are set to receive a fresh economic tendency report for June from Sweden's National Institute of Economic Research. This is after consumer confidence in the country plunged in May to its lowest level in over 6 years, and as the manufacturing sector sent signals of weakness. While the softer confidence is yet to have a significant impact on Swedish stocks, it appears momentum may be declining. The iShares MSCI Sweden ETF, for example, which has among its top holdings firms such as Ericsson, Volvo, and Sandvik, has shed close to 6% since late April. Investors will likely be eyeing further developments in Sweden's housing market, household and corporate debt levels, and business and consumer sentiment, as well as international factors that have been spurring growth concerns, including the unfolding of US-China trade talks and Brexit, for additional insights into the country's general economic and financial well-being. In the meantime, select the event calendar option in the IBKR Trader workstation for a full list of US and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine with Interactive Brokers, asking you to enjoy the week ahead.